Hi, everybody. I'm Jeff Barton for the Mortgage Minute, and this is also for the Mortgage Voice. We do this show probably 2 or 3 times a week on LinkedIn and Facebook. We sometimes add in Instagram, some other social media. We also do our radio show each and every week on 5 stations in 3 different states, as well as YouTube and the Big 8 podcast. So I appreciate you listening in. We bring some interesting information sometimes. Mostly it's mundane, grinded out information that you're going to need when you need a loan. Some of the information that we provide is available to you too. We go to Housing Wire, and we also go to Mortgage News Daily, a couple of websites, as well as obviously what's out there in the marketplace to find out the best information to pass it on to you. And here we go again. Interest rates today, 2.87 for the 30-year fixed. The 15 is at 2.38, 2.35 for FHA, 3.33 for jumbo, and 2.31, excuse me, for the 5/1 arm. Our 10-year treasury is selling, the yield today rather is 1.0869. Now we're flirting with that 1 point again, and we're not quite sure whether it's going to go up or down. I do believe that we will see a gradual rise in both yields as well as mortgage interest rates throughout the year. We've had some different opinions on that from whoever you speak to, but I believe in, let's say, 5 or 6 different experts, economists that I read. They all hint at the same thing that I'm seeing. To a lesser degree or a greater degree, we probably will see rates rise throughout the year, but not to a significant extent. Certainly what we are seeing, though, is about a 20% reduction in the total number of refinances that will happen in 2021, which will mean that we will have somewhat of a consolidation in the marketplace. It's probably why it's led to 4 different loan companies, mortgage companies, going public this year. We all know it's United Wholesale and Rocket, but also Home Point as well as Loan Depot. Loan Depot has come out with this huge ad campaign in the last 2-3 weeks. You may have seen it. That is one of the reasons they want to raise their profile a little bit and also be able to announce that they're also going public. A couple of appointments by the new Biden administration coming in. The CFPB is going to be headed up by a guy named Rohit Chopra. He's head of CFPB. He was the one who helped Elizabeth Warren, or one of the people that helped Elizabeth Warren set up the CFPB in 2008 under Dodd-Frank. Now, there are some concerns that they will be more aggressive in their regulatory practices and aggressive in their prosecution of whatever they perceive is the problem in the mortgage industry or in related fields. I'm not sure if that's good for the mortgage. We'll just have to kind of figure it out. It could be good for consumers. Could be. Again, like all of these appointments, you don't know until you know. So let's just wait and see on that. Let's see. There was a decrease in mortgage fraud this year by 26.3%. Now, that's offset, of course, by the fact that most of the refinances out there are rate and term, and they have no real issue with verifying income or verifying occupancy. If you look at strictly what we're doing in purchase market, the fraud increased by 6%. Now, mortgage fraud in general is down, but the states that it's up in are New Hampshire, Wyoming, North Dakota, Nevada, and Rhode Island. And if you combine all those states together, you still wouldn't come up with the total number of borrowers eligible to borrow that you have in several key markets, Los Angeles being one of them, Southern California, California in general. So kind of small areas of the country that have some issues with it. Where are we here? 416. Okay. Yes. Freddie Mac Refis to take down, to be down 20%. We covered that and how 2008 helped in forbearances. The reason we haven't seen a lot of foreclosures in this forbearance market is because in 2008 we set some pretty high standards for servicing, and as a result, those servicing standards have really fared well during this particular forbearance issue and time period. Anyway, we'll see tomorrow. I'm Jeff Barton for the Mortgage Minute. Thanks very much for tuning in, and we'll see you next time.